Good morning, traders. Welcome to the morning update from Phoenix Blue. Today it's Wednesday, the 15th of February, and my name's Mark Owen. Well, I hope you all had a fantastic Valentine's Day yesterday and you were spoiled rotten. Did the market spoil you rotten yesterday? That's another question. So you can see major news we've got coming out today. We've got average earnings and claimant count change coming out of Great Britain. Then we've got manufacturing sales coming out from Canada at 130, and at the same time we've then got core CPI month on month, CPI month on month, core retail sales month on month, and retail sales from the US. Now, obviously, yesterday we had Chair Yellen speaking, and today she speaks again. Now, there's certain uncertainties that lie around the U.S. economy at the minute, revolving around Donald Trump's pledges that he's going to make to tax cuts, deregulation of Dodd-Frank, helping smaller banks lend to small businesses, etc. Then we've also got the tax cuts, the spending on infrastructure, the not rearrangement, but the reassessment of trade deals with certain parts of the world. And how will this play out in terms of the U.S. economy? So although the U.S. economy is in good stead right now and they could probably handle the rate hike that they're talking about, because of these uncertainties in trade deals and tax cuts and Dodd-Frank agreement, changing regulations, it's all uncertainty that's lingering over the U.S. So although the statement yesterday from Yellen was relatively hawkish, quite hawkish, considering they're still doing the 3 rate hikes, the economists basically feel that these rate hikes are going to come in the second half of the year, and still don't feel that the next rate hike will be in March, although it wasn't ruled out yesterday. So we can't take that into hand. So I reckon what we will see from the dollar charts will be a little bit of back and forth range-bound market. We'll probably see acceleration on good news and then a pullback when it's a little bit quiet. So the U.S. markets, or the majors and the minors, will be, I think, over the next couple of months, until we get that direction, that confirmation that the rate hike is coming, we're going to see a little bit of choppiness, to be fair. And then obviously, the last major news of the day is the crude oil inventories. Dollar index, well, if we look at what's happened, the dollar index pulled right down into the 61.8, which is this blue line here. And if we look, we've gone 1, 2, 3, 4, 5, 6, 7, 8 consecutive days now with higher lows. Some of those days have not exceeded the previous day's high, but the consensus here is we can see that it's dollar bulls in play. Now, on the back of that, what we've got to be careful of is we're not getting into a dollar move too late. So if we have seen a one directional move, and I wouldn't exactly say that the candles are extremely bullish. If you look at the momentum bodies, the candles, you have a big bullish candle, then it's a small body, then another momentum candle, then a smaller body. So the buyers aren't there in aggression. They're steadily there, and it's a steady flow. So be careful. Don't get into any dollar moves too late. Euro dollar. This is, again, if we look at this market here, it came right up into our market cap zone, which we can see down at the 108.20, and since then we're now moving very, very nice down to 105.70s. But look at this. Buyers came in here. Buyers came in this particular day and this day and this day, only to see them turn around towards the back end of the day. So buyers for the last sort of 4 or 5 days have been quite active within the euro dollar, although the sellers have won the day quite convincingly. I wouldn't be surprised if we see some sort of correction over the next day or two. Maybe a Friday correction is on the cards, and that will give us an opportunity to get into this market for the following week. Okay, so dollar yen. I'm just going to skip back to euro dollar. So if you look at euro dollar, we had a rising wedge formation, which is a reversal formation. Expect the market to drop to the downside. So this one's played out. Now, if we look at the dollar yen, we can see this had a falling wedge. Now, those two markets are correlated. Okay, so one you've got the dollar as the term, one you've got the dollar as the base, and they're both giving similar signals. So therefore, you can see the correlation between the dollar strength or dollar weakness in these two markets here. Again, it's doing as it says on the can, but you don't want to be getting into this move too late. Wait for a correction before you get into this market, if you are going to trade it, that is. Aussie dollar, so this one's been quite interesting. This one's probably been the strongest market of the bunch, or I should say not the market. Australian dollar as a whole has been the strongest currency as a whole over the last few weeks. Rationale and thought process behind that is that the data coming out of China has been extremely good since beginning of 2017, and what this has seen is a big push in commodity prices. So on the back of commodity prices rallying, what we've seen the Australian dollar push up in price. Now, what's really key here is that across quite a few markets now, the Australian dollar is coming into some key significant areas. If we look at this weekly chart here, I've zoned out the grey box through this area, which is roughly around 7,700 to 7,800. Yes, it's a 100 pip zone, but it is a weekly chart. And if you look at all these tips of the wicks on the weekly chart, although they're pushing right up, they're failing to close above this 7,700 area. So you've seen a lot of push throughs on the daily charts. You'll see bullish candles leading up into around 78, but on the weekly chart, because it's condensed, what you're seeing is a push up and then a rejection of that level and coming down. So depending on your rules, this would be definitely an area of looking for, see whether the market's going to do something similar to what it's done back here and here and here. Now look at the way the candles are moving. So you've got small bodies, acceleration, and then you get doji at this long-term trend line. Finally breaks through. So as it breaks through, you would expect the momentum. Last week, indecision candle, hanging man, and then this week we're forming something similar. So the question I ask to you is this where we're going to see the market top out on Aussie dollar and have a little bit of a correction? Okay, gold. So gold, again, this is a market we traded last week. We got in short, we made some decent money. We came back out of the market because of the uncertainty that lies ahead, and it wasn't moving down as convincing as we'd like. So we were quite aggressive with our stops. And the question is now, we're going to see this market touch this trend line here and push up to 1250. If we are going to see that, then what we'll probably see is dollar yen drop. So this could be the dollar correction we were just looking at, and how the momentum's fading a little bit in the dollar. So if we get a push up to 1250 and any sort of rejection candle around here, then we'd expect the market to come down to about 1200. So I think that's our next play now with the dollar. So we don't want to be getting into the dollar too late. Wait for a potential correction and then look for your trading opportunity based upon your rules. If you're a trend trader, then you're going to have to wait a little bit longer. If you trade both trend and counter trend, then obviously you've got twice as much opportunity to get into the market. One to watch now in the commodity side is cocoa. It's come right down to September 2011 lows. This has been a market that's been high on our watch list now for some period of time because of the commitment of traders. The downside to this market was that not only one of our key factors was that the commercials were very, very aggressively buying this market. The downside was they were also selling it very, very aggressively as well. So the issue that we have there is that if we're looking to get long this market, we'd like to see the commercials buying and at the same time reducing their short contracts, which wasn't happening. So now it's in here. It'll be interesting to see what figures come out of the commitment traders this Friday, 9:30 p.m. and we'll be watching to see those closely. If we get any sort of nice daily rejection level, rejection candle off the 1900 area where we're currently sitting now at 1894, then I would be happy to place a trade on this market in the potential that the numbers coming out this Friday will have reduced. The question is, if we don't get any sort of rejection candle, I will not be placing any order, and I'll be waiting till the numbers come out Friday night, and I'll be looking to reassess this market next week, because as you can see, when this market moves, there's a fantastic movement to the upside and to the downside. So we could have a fantastic trade from sort of 1900s up to the 27, which is the next major or key structure area, which is that grey zone marked out. Okay, that's it from Phoenix Blue today, guys. We wish you a fantastic trading day. Stay disciplined. Don't jump into any trades through eagerness. Um, Today is the final day to register for our free trading event tomorrow. This is held in London, 16th of February from 2 p.m. If you would like to attend, then what you need to do is drop us an email to info@phoenixblue.co.uk and we'll send you a link out on how you can register for the event and it will reserve your seat. Okay, so guys, have a great day and we look forward to speaking to you tomorrow morning. Bye-bye.